And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, it is Two Dads on Money today. We're going to be talking about rent versus buy today. So if you're younger out there thinking about you want to buy a home, we're going to kind of go through the pros and cons of two experienced home buyers who have been through the muck with buying and selling a few homes in our lives. We'll kind of go through all the things to kind of pay attention to, look for, all those type of issues this morning. So also talking about markets, earnings continue to roll in. Between this Friday and next Friday, we will have roughly about 74% of all S&P 500 companies reporting. So far, earnings are beating estimates, which not surprising. We lowered the bar so much going into this earnings season that the beat rate is going to be very high, and so everybody's kind of very excited. In fact, earnings analysts right now are very busy ratcheting up their earnings estimates going out into next year. So, all this concern over tariffs and how these tariffs are going to impact companies and they're going to have to eat out the. They're just going, I don't think that's going to be the case, and they're very optimistic. In fact, earnings estimates are getting back to where they were before the tariff announcements as well. So again, they're getting very, very optimistic once again. But so far, earnings have been good. August, the month of August, is the strongest month for corporate buybacks, and that's because basically the window opens up after the end of this month. Corporations like Apple, Google, Microsoft, etc., they will all have reported earnings by the end of next week. So they've got the ability to buy back stocks. So stock buybacks roughly run about 11% of the total year purchases in August. That's one of the strongest months. Actually is the strongest month for buybacks in the year. And that's also because a lot of corporations, they end their quarter in the third quarter. So there's a couple of reasons to go with that. But anyway, August, very strong buyback. That could provide, again, some support for the S&P. I've been talking lately. There's some risk to the markets here currently. We're very overbought, very extended, very optimistic. A lot of very excited retail traders in the markets. In fact, Open Door has 2 million call options on it. Now, this is a stock that trades at about $3 a share. It is the next, now the next meme stock for retail traders. So remember the whole GameStop, things we had back in 2021, the GameStop, AMC. Well, we're now doing that with Open Door. This company's on the verge of bankruptcy, but it's got such a low float, it's very easy to manipulate. So, retail traders are taking advantage of this and running the stock price up. So, but this is just that speculative frenzy that's back in the market. I've been talking about this for a while and saying, hey, look, this market could have a 3 to 5% correction. But this market just kind of keeps trying to grind higher. Now, yesterday, we'll talk about this in a second, but yesterday, the markets opened up decently in the morning, sold off into the afternoon, barely finished on the positive side. But that's kind of the general, print of the market right now, is this bit of exhaustion that we're kind of seeing between buyers and sellers. So again, we'll keep kind of paying attention to that as we kind of go along. And again, the economic data yesterday, leading economic indicators came in at -0.3. That certainly doesn't suggest that the economy is booming in all standpoints. It would have been much worse in that print had the S&P not been doing so well. So that's one thing that's kind of included in that sentiment index is the stocks, and those have been doing well. So that kind of helped lift the index. But overall, it still continues to be very weak, and that really kind of goes along with something we'll write about in this weekend's newsletters: retail sales. Retail sales have been flat since 2022, for almost 3 years now. Retail sales aren't growing. Now, we had a decent retail sales report, and a lot of headlines were going, oh, this is great, the consumer is really strong, but retail sales have been flat on a total basis. And the only time you see flat retail sales over a period of time is typically just prior to the onsets of recession. So again, the risk here is that the economy is weaker than expected, and a lot of these earnings expectations don't come to fruition in the future. So again, those are the risks we got to kind of continue to pay attention to. But right now, everything's fine. Markets are doing well. There is some risk here. Again, take some profits and kind of just rebalance your risk. It doesn't mean markets can't go up some more. In fact, they probably could. but that's okay, right? It just take some proactive action, because it's harder to do it in the middle of a decline than trying to rebalance your risk, because again, now you don't know where you're going. It's always better to do it in advance of it. So here's what you need to know before the bell this morning. So bonds have been, kind of just trapped in a trading range here for quite some time. Yields really haven't gone much of anywhere, despite, everybody saying, oh, the yields are going to go to 5 or 6%, whatever. They haven't, and they've just been kind of stuck here around 4.3, 4.4% for quite some time. And that's a function of economic growth and inflation. I had this conversation last weekend with Adam Taggart. If you want to know where interest rates should trade in terms of the 10-year Treasury, it's GDP plus inflation. There's about an 84% correlation historically going back to 1970. But that's just because that's how interest rates are trading off. They're saying if I'm going to loan money, I've got to cover inflation and I've got to cover opportunity cost of investing my capital somewhere else. And so that's how you kind of get to that number. But here's what's going on technically with rates, because you've got a very interesting process right now of a giant wedge kind of getting built into yields at the moment. So yields are going to break out one direction or the other. If they break out to the upside, there's going to be a decent move up to probably 4.8, maybe 4.9% on that. So again, you're going to need some type of inflationary pressure to lift that rate of inflation above GDP where it is now to add to that total return. So if GDP is at 2.4%, and you've got inflation at 2, so it yields straight at 4.4, you're going to need inflation to go to 2.5, whatever, to push that up to there. So again, you're going to have to have some type of inflationary push to push these yields higher towards 4.8, 4.9%. If the economy slows and we start moving in towards recession, we see inflation continue to come down, we see economic growth begin to taper off, which again, if you take a look at what Goldman Sachs has been saying lately, that's very likely going to be the case. We could see yields kind of break down below this wedge, and again, that would probably put us closer to 4%, maybe 3.5% on the 10-year Treasury at that point. So, but again, just technically, we've got this very big technical wedge that's now building inside of interest rates. So something worth paying attention to. There's a trade setting up here. Just don't know which way it's going to break out yet. So again, just kind of paying attention to that. Outside of that, the rest of the market's continuing to do fine. As we said yesterday, the market kind of started out on a strong foot yesterday, but pretty much ended flat. So we haven't really, we've broken out minorly to new highs, but not dramatically. So again, we're still just kind of this kind of lift that's going on in the market is fine, but we've got a very, very strong rise, but again, another wedge pattern kind of developing here. So again, a breakout to the downside is going to lead to that correction that we're talking about. Now, here's one other fact. We've had the NASDAQ has now traded above its 20-day moving average for over 60 days. That is the longest stretch of the NASDAQ trading above its 60-day moving average since 1999. So again, just a lot of exuberance being built to the markets. Technically, everything is fine, but again, just paying attention to kind of money flows. They are very extended right now. That typically marks short-term peaks in the markets. You got what appears to be an example. If you take a look at retail trading flows, etc., those appear to be reaching a level of exhaustion, which is typical towards the end of a move. And again, this has been a very, very big move for the markets. And we're just kind of defining a lot of these compression patterns within the markets, which those don't mean the markets are going to crash. But what it does suggest is that when you get these compressions, it's a sign of exhaustion in the markets, and then the next move typically tends to be in some type of corrective manner, more often than not. But again, this is why we just talk about managing risk, managing portfolios, etc. But that's what you need to know before the bell this morning. We'll come back, pick up with John Penn, Two Dads on Money, talk a little bit about buy or rent. That's been one of the big questions we've been getting from clients lately. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security? And how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. Realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
The Real Investment Show.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. John Penn joining me. Good morning, John. How are you?
Morning. I'm good. How are you?
Very well. It's Tuesday.
It is Tuesday.
Third best day of the week.
Just keep the coffee coming.
Exactly.
Keep it hot.
So talk a little bit about housing. We've been getting a lot of questions lately. Of course, there's also a lot of headline commentary about housing. Housing's unaffordable. I can't afford to buy a house. It's not fair. Hey, we get it. And but there's a couple of things that I think is worth talking about in terms of buying a home. And again, John and I have bought lots of homes in our lives, and it's part of something you wind up doing. But I think, first of all, I think there's a couple of myths about home ownership that we need to kind of straighten out first. And this is kind of an interesting conversation, because when you talk about this, everybody's very defensive. It's something like you're attacking a national morality of something, that there is a right to home ownership, and there's not a right to home ownership. It is an opportunity to own a home, but you don't ever really own it, and that's one of the big fallacies that there is about home ownership. You never actually own your home, because you're going to wind up paying taxes on it for the rest of your life. And you don't, and yeah, you may have a piece of land that this house is sitting on, but you don't own the mineral rights to the land. I mean, so you're paying for something, and yes, you will eventually own the structure, but you will never really own it because you're always paying taxes on it. And that's just part of this. And this is, the other side of this discussion about home ownership is that it's the American dream. No. Home ownership is not the American dream. It is the representation of the achievement of the American dream. The American dream has always been that I could come here to this country from some other place with 2 nickels in my pocket, and I could build, through capitalism, I could build a successful life. And the representation of that success was the buying of a home. But putting yourself in debt to buy a piece of real estate is not the American dream, right? That can turn out for a lot of people being the American nightmare. And a lot of people have figured this out. But, so we have to put some things into context. And I just had this conversation recently with my daughter, a because she's getting older now. She's in her early 20s, got her job. She's got a very serious boyfriend right now, and he's an electrician. They're doing great. They're doing fine. And they're starting to get that bug. It's like, oh, we need to buy a house. I'm like, no, you don't really need to buy a house. There's nothing wrong with renting. And I think this is one of the, and the reason that we have this narrative that we have to buy a house, right? It's marketing. It's all from the National Association of Realtors. And you see the commercials that get run on television. It's like, buy a home. But they've been marketing that for years and years and years and years, that you have to buy a house. Well, of course they're marketing that, because that's the National Association of Realtors represent realtors, which sell you the houses, and that's how they make money. But you don't have to buy a house. There's absolutely nothing wrong with renting. This is a myth that has been pervaded upon young people ever since, really since the 90s is where it became more rampant. But turn 2000. Once we turn around the turn of the century, Alan Greenspan was promoting adjustable rate mortgages and getting everybody into a home. That was a massive lobbying effort by the National Association of Realtors back then. So we've now kind of built this whole myth that you have to own a home. And think about this for a moment. When you rent something, yeah, you don't own it, right? But when something breaks, you just call the landlord and say, come fix it, right? Something falls apart, you call the landlord and say, come fix it. There's some benefits to rent, and your rent structure is flat. You know what it's going to be every month. You sign an 18-month lease, you know exactly what your rent is going to be every month. Everything else, you can work around that. You can invest, do whatever you want to do, save money. And you don't have to worry about all these other expenses that come along with the house. There's nothing wrong with renting. And I talked to a lot of young people, and it's like I'm holding up a crucifix and they're like Dracula or something. Don't say that. Renting's terrible.
Their head spins around.
Yeah. And it's very interesting. But there's a lot of days. Look, I own a house, and there's a lot of days I wish I rented, because every time I get a little extra cushion, built up in the discretionary account at home, something has to get fixed, right? And so don't poo-poo renting, right? Until you're ready to buy a home. And we're going to talk about, what being ready to buy a home looks like here in just a minute. But John, your thoughts?
Yeah. So you were talking about owning a home. I think that it's the other way around. I think the home owns you. I really do. Because to your point, there's always something. Just even on my way out this morning to come in here, when I was leaving at the crack of dawn, I went out the front door. I couldn't open the garage door, because if I open the garage door, all of our dogs will wake up. Right. It'll get my wife out of bed. So I had to sneak out the front door. And as I'm sneaking out the front,
I can't do that, because my front door alarm goes, front door open, and it's super loud.
Yeah, so we have all that turned. We have that turned off. Makes sense for having a security system. There's something else you got to think about with a home, right? So I had to mute that. I'm sure that'll really save us if somebody breaks into our house. That's a whole other show right there.
The alarm's going, hey, there's somebody in the house. Hey, wake up.
Wake up. Don't wake the dogs. So as I'm walking out on the front porch this morning, I noticed there's a loose board. I'm just like, and so I went over there, started wiggling on it. I was like, well, that has to be replaced. I'm already thinking through my mind, how much is that going to cost me, right? Yeah. Because you turn around, it's like, oh, who's going to fix it? Oh, it's me.
Yeah.
I'm the one who has to repair this.
I'm gonna call the fix-it man.
I'm going to call the person to fix this, and all of a sudden my own phone rings. It's me. So those are all things that you have. There's always something, and it's not. So to your point with rent, you know what your rent's going to be, and yes, I can already hear from folks who are renting right now. I know that there's that potential for rents to increase every year, but at least for that whatever the term of your lease is, a year, 18 months, 24 months, what your payment is every month.
Actually rents are declining, because we're getting a glut of multifamily units being built because of this. And so rents are actually declining. This is why, we talk about inflation. We don't see, the massive increase in inflation everybody expected, because homeowners equivalent rents are declining.
Yeah. So, so I get the idea around, well, I'm renting, or it's kind of it's kind of seemed as a negative. Look, I've owned homes. I own a home. My wife and I own a home right now. It has its pros and cons, right? But I've rented too. and
which has pros and cons.
Its pros and cons. And I tell you, looking back on the times where I rented, I mean, I remember one of the most recent, we rented a townhouse. We were living in the north side of Houston, and we rented up there for quite some time. And one of the hot water heaters went bad. I didn't have to fix that. I just made a phone call. Somebody came over and replaced it. That wasn't any money out of my pocket. It was just, I didn't have to deal with the stress or arranging folks to come over to make the repair. It was just easy. It was just easy. So I think sometimes before you look at making that jump to buy a home, it's not just the principal and interest. It's not just the mortgage payment that you have to think about. It's everything else. Property insurance, property taxes, homeowners insurance, flood insurance. You need furniture for the home. Why? I mean, there's so landscaping, lawn upkeep, water, utilities. There, you really need to do your research before you make that jump into a home, because again, chances are you're going to be paying a lot more than what you think you will.
Right.
Right.
Well, and again, and this is what we'll talk about here shortly. But if you just, what's important, and again, what I want to get into in the next segment is really, okay, great, you want to buy a house. Yeah. Here's the steps you need to consider to know when you're ready to buy a home. And we'll get into all the, in the next segment, we'll kind of get into all the other things you have to consider, because again, there was a recent survey that was just taken, and they surveyed all these, first-time home buyers. And we saw this, particularly during the pandemic, we saw a lot of young people, they were getting stimulus checks and they didn't have to make rent, those type of things. So they were able to accumulate a little pile of cash. And so they all ran out where they were buying homes. We had this spur to home buying during that period. And a lot of these, there was this kind of this chase to buy a home, and you had these multiple bids on houses, and there were people actually bidding on houses that they had never seen. They were just trying. They were so convinced that they had to buy a house that they were just bidding on houses they didn't even go look at. And so they took this survey late last year and early this year, and about 60% of everybody that went and bought a home, first-time home buyers, regretted buying the house.
Interesting.
And we'll get it. And the reasons are not, oh, well, it just wasn't the house I thought it was, or, it's, whatever. The reasons are exactly what we're going to go through in the next segment, because of all the stuff they found out about home ownership. And again, home ownership is fine, and it's great to say, and I think it's really more of just a personal pat on the back. It's like, yeah, I own my home. But first of all, nobody cares. B, it's really not all that fun to own a home. Let me just, to John's point, there's always something having to get fixed. I just had to replace a whole electrical panel in the back of my house the other day. So, those are never fun things. So again, it's just, these are the issues we kind of just want to go through this morning. And I encourage you, if you want to buy a house, it's great. And now what we're not talking about here is investing in terms of, if you want to buy houses to turn them into rentals, that's an entirely different conversation. That's a business, and we can talk about that at some point in the future. We can have a whole show on how to build your own rental business if you want to do it. Just put comments in the chat. Let us know if that would be of interest to you. But what we're talking about now is particularly for younger individuals who think they have to go buy a house. And again, you hear so much in the media right now. Again, it's like, oh, houses are unaffordable. And then there's this whole oppression on young people because they can't afford a house. That's not really the case. You can afford a house if you want to. You just have to do it in the right manner. We'll talk about that when we come back from the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security, and how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. realinvestmentadvice.com.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interests first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
If Lance dressed up like Danny, maybe his wife would listen to him. No, that is not the case in my household. I actually had this conversation.
She wouldn't listen to him anyway.
The Real Investment Show podcast.
I had this conversation with my wife yesterday. I told her no on something she wanted to do. And she goes, I'm sorry, I think I misunderstood what you said.
Same show, your schedule.
You meant, yes, you could do that, right? And I was like, yes, honey, that's what I meant. So, yeah, she goes, I'm going to do what I want to do. I'm like, okay.
All right, love you. See you.
Exactly.
At realinvestmentadvice.com.
I could wear a tuxedo, and she is not going to listen to what I have to say.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors, online resources, and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So real quick, during the break, you heard the commercial that's coming up August the 4th will be exclusively digital. We already digital now, but obviously we also stream live to a radio show, which is why we have commercial breaks in the middle of our podcast. But that ends on August the 4th, and we'll be live here on YouTube, also on X. We're streaming live on TikTok this morning as well. So wherever your favorite digital platform is on social media, that's where you're going to find The Real Investment Show. We'll still be running the show every day, just like we do now, but we've got a lot of new stuff coming, interviews with guests, all kinds of stuff that we weren't able to do before we'll be able to do now. So a lot more flexibility that we'll have with the show on things that we can do, topics we can talk about, etc. So that's coming August the 4th. But again, you'll find us live on YouTube, X, TikTok, working on Meta, a couple other places, Facebook as well. Sorry. We're on Facebook this morning as well. See, Brent's already got us up and running. So wherever you're going to find your favorite digital platform, that's where you'll find us. Also, we'll have our podcast on Apple iTunes, Spotify, SoundCloud, etc. So you'll have all of your podcasts, you'll have your live digital, but we will be all digital. We will no longer be on the radio coming August the 4th. It's been a very long 25-year career on radio, but we're now going to just make the move to being fully digital. So we appreciate you being with us. So make sure and like and subscribe to the channel so you get notified of our shows when they go live, so that you'll have that available for you. So just like and subscribe to the channel. We appreciate it very much. So talking about, housing, a lot of people, and saying again, this is what I'm saying, when you talk about housing, people get very defensive about it. And if you go to our chat, there's people making a lot of comments. Look, let me tell you something. I am 60 years old. If I did not have a wife, I would not own a house. I would rent in a minute because I don't want to deal with all the headaches of it. And again, one of the big fallacies about home ownership is that, well, you buy a house, it goes up in value, and then you make money when you sell it. And that's not really the case. There are short-term periods that we saw, like during heading up into 2008, where housing prices get very extended above kind of normality. And if you bought a house at the right time, you made a bunch of money with it, and that's fine. But if you own a house for a very long period of time, and again, we talk about anchoring effect when it comes to investing portfolios. Like I remember what I paid for my first house. I paid $110,000 for my first house back in 1990. And I sold it and I made money, I thought, right? And then I went back and I did the calculation of all my taxes, my maintenance, my upkeep, all that. I didn't really make that much money with it. And that's the one thing we always forget. We get anchored to what we bought the house for. We know what we sold it for, but we forget about all the money we spent on that piece of property in between, that you have to calculate into, well, what was my cost of ownership and really what was my profit margin on the house? And what you'll find out in most cases, if you own a house for a very long period of time, you really don't make that much money with it. But that's not really why we buy a home. We buy a home to live in it. And so that's not even really, it doesn't even really matter because your house isn't an asset. It's something that you're buying. Now, if you're just buying a house, again, to flip it, sell it, whatever, that's an asset, different conversation, nothing wrong with that. But again, when we're talking about now about for younger individuals wanting to look at owning a home, there's some very specific things you need to do to put yourself into a position to own a home. And you can own a home. There's people talk about, the housings are unaffordable. No, they're not. Maybe the house you want to buy is unaffordable, but housing is not unaffordable. You can find houses. I just ran a quick calculation. If I make $60,000 a year, that's kind of a little bit less than the median average salary in the U.S. I can afford about a $250,000 home, and I just Googled homes in Houston. There's 219 listings below $250,000. So yeah, I can go buy a house. But am I ready to buy a house, John? That's the big question. And I kind of have some rules, but let me hear your thoughts first.
Yeah. So and a great point there. It's like you can afford to buy a house with those numbers, but maybe it's not the initial house that you want.
Yeah, that's why they call them starter homes.
There's a big difference, right? And and looking back, just with my own experience, the first home that we bought, I mean, we bought
it was a piece of crap.
Well, we bought the first home that we bought, it was a 2-story, 2-bedroom, like 2-bathroom townhouse, and we were down kind of outside the NASA area here in Houston. And I think when we bought that home, I think we spent just under $70,000 for it, and then we sold it when our second daughter was born, and looking back, I sold it too soon.
Right.
I should have kept it. I should have kept it longer. We should have made it work because we sold that house too. And I sold that house. I think we paid $68,000 for it. And when we sold it, I think I sold it for like $72,500. But when I went back and looked at what I paid in, maintenance or property taxes, insurance, I lost money. I lost money.
Yeah.
What I should have done was kept it and turned it into a rental.
Yeah.
I should have, but I was so young at the time.
Didn't know
that I didn't know. And that wasn't even in my world of thought,
right? Because
I was so focused on got to get a bigger house, because my family was growing.
Got kids coming.
So what did I? So we sold it and we went and bought something bigger. But in looking back, I would have been better off if I would have kept that home longer. That's
usually the case.
Yeah.
But again, this is so. Let's talk about what you need to do.
Yeah.
So you're wanting to go buy a house. Great, I think it's great. So first of all, don't get. The one mistake that I see a lot of people making is like, oh, I want to go buy a house. So great, show me what house you want to buy. And I do this a lot with people. Show me the house you want to buy. And, it's, 3-4 bedrooms, got a pool in the backyard. It's got all the latest updates to it. It's fantastic. It's a beautiful house. And, it's $500,000. It's like, yeah, you can't afford that. So, you've got to keep your expectations. Your first house that you're going to buy is going to be a piece of crap. And it's probably going to be a fixer-upper in a lot of cases. And that's okay. There's nothing wrong with it. Location is important, but it's not the main driver. You're probably not going to be able to buy a house in the location that you want to be in. If you want to be in the hot area of town, whatever. Look, I can't afford to buy a house in River Oaks. Okay. So I would like to, but I can't afford it. So that we have to have some reasonable expectations. But here's the important financial steps to get you there. And if you can't do these financial steps, you're not ready to buy a house. The first step is the easiest to do, which is you have to be saving and investing money, right? We have to be building savings in time so we can retire at some point down the road. But also you've got to have free cash flow. If you can't save money every month, that's your first hurdle to come. Can I save $500 a month and put that to an investment account? If you can't do that, you are not ready to buy a house. So let's say you can achieve the point to where you can put away $500 a month for your retirement into an S&P index fund, and you can do that every month. And now you establish, okay, I want to buy a house. Okay, so if I want to buy a $250,000 house, I need to have about $1,400 a month for a mortgage payment, give or take. Okay, so if I'm making $60,000 a year, that puts me into my 28% kind of mortgage, right? So, kind of when you look at how much money you should allocate towards a house payment, should be somewhere between 25 and 30%. You don't want to be spending 50% of your income on a house payment because you just can't afford anything else at that point. So if I can save $500 a month, and then I can also save $1,400 a month every month, just like I'm making a mortgage payment. And I can put that away towards a down payment on the house. And I want to save up 20% for the down payment of the house. But if I can't make a monthly mortgage payment to myself and save money for retirement through my 401k plan, whatever I'm doing, you are not ready to buy a house. So those two things, if you can just do those two things up front, you're ready to start considering buying a house. But just running out to buy a house and say, I just can't, look at your personal finances. I talk to so many young kids and they're so upset because the media tells them is like, oh, you can't afford to buy a house because, they're just so expensive. And I sit down with them and I say, well, let's take a look at your finances. Let's see if you're ready to buy a house. And they can't even save money to invest because they're spending everything they make every month on useless garbage mostly. So if you can't structurally pay yourself a mortgage, set up a savings account and start putting a monthly mortgage payment into it. If you can't do that every single month without fail, because look, if you can't do that every month, the bank's going to come take your house at some point. So if you can't do that easily every month, put away that mortgage payment and save money for your retirement, fully fund your 401k plan, put money into a savings account, all that. If you can't do those two things, you are not ready to buy a house. John?
Yeah, I mean, it's kind of the first of the basics is, we talk a lot about having that savings or that emergency fund set aside, depending on kind of what your budget is, depending on where you are in your career, maybe having, 3 to 6 months worth of expenses just set off to the side.
Yeah, we're going to get into that, why you need that,
right?
Particularly owning a house.
Now, that 3 to 6 months that you have set aside for your expenses, that money is not earmarked for a down payment on a home.
That's right.
Your down payment needs to be, to Lance's point, those are additional savings that you need to set aside above and beyond that 3 to 6 months, right? So in this example, if you're looking at a home with a value, with a price tag of $250,000, you want to look at a down payment of 20%. Well, that's $50,000 as a down payment, right? Well, that $50,000 doesn't come from your 3 to 6 months of emergency fund savings. That's above and beyond that, right? And the reason that we're talking about 20% for a down payment is because you want to avoid, when you're applying for that mortgage, you want to avoid PMI, which is private mortgage insurance, right?
And there's also just another point of having some skin in the game. Is that, once you pay that 20% down payment, you actually have some equity in the house to deal with, which also has a big benefit later on down the road. We'll talk about that in a second. We'll come back from the break. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security? And how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. realinvestmentadvice.com.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So just wrapping up our conversation on home ownership, just a couple of things. If you're young and want to buy a house, again, there's some things that financially you need to do to kind of put yourself together and put yourself in the right place. So if you think about a budget for a second, right? So I've got 100% of the money that comes in that I earn. We want to make sure that we're funding our 401k plan. We want to make sure we're setting aside some cash for investing and savings for our future, because you don't want to be house rich. Right? Great, I own a house, but you have no money in the bank, right? And there's a couple of reasons for this, in particular, setting yourself up in this particular manner. So if you think about the breakdown of your budget, right? So we said that you can have 25 to 30% of your house being your house payment. So that leaves you 70% of your income. I like 30% to go to savings. So again, when you start funding your 401k plan, that's pre-tax in a lot of cases, unless you have a Roth, then you have to adjust your numbers. But when you can fund something pre-tax, then that also factors into that 30%. But again, if you can kind of at least want to target 20% of your money being savings. So 30% a house, 20% savings. So that's 50% of your income in savings and your house note. Then the other 50% is what you live on. So that's where your budget is. That's utilities and rent and food. Utilities and food and entertainment and all that. That's the other 50%. So when you need to sit down and think about this, write this down on a piece of paper, get this structured setting out. Now, I was talking about a second ago that you need to set aside a monthly mortgage payment. So you're doing your savings, you got your 20% in savings, and you just set aside this monthly mortgage payment. Well, if your monthly mortgage payment is $1,400 a month, and you're paying $1,000 a month in rent right now, that means you need to set aside the differential. So $400, because you're already doing that every month with the rent. So just whatever those two numbers add up together to get you your down payment, your monthly payment, that's what you want to set aside, right? So that you've got that worked out. But once you can make that financial kind of model work for you, and you're saving up some money and you're saving up your down payment, working towards your 20% down payment, which will lower your interest costs and you can negotiate better on houses with a 20% down payment, et cetera. You also don't get yourself in trouble. You're now kind of ready to buy a house. So great. Now you went and bought a house. Now here's all the bad news that comes with home ownership. And this is why, to John's point, when you're thinking about your budget, 20%. We always kind of we make the mistake of saying, okay, my 20% down, my 20% of my income or my 30% that's going to pay my monthly mortgage. You need to also create a category for all the other expenses that go along with a house, because this is the one thing that derails a lot of young homeowners is that all of a sudden they get in this house and you've got what? Property taxes, homeowners association dues, insurance above and beyond your homeowner's insurance. You've got other insurances that you have to pick up. You've got utility bills, of course, but you have that with, renting, but you've got a lot more going on with the house. And then you have this nasty thing called maintenance and upkeep, which, as John will tell you, gutters break. You've got you've got issues with your lawn, whatever it is. You've got a tree that gets ill that you've got to take care of or get removed. And it seems like our washer goes out, dryer goes out, refrigerator goes out, and you can't just call somebody and say, "Hey, come fix my house, come fix my refrigerator," right? Because you're no longer renting; it's yours now. You own it, so you've got to do it yourself. And these other expenses, and this was in the survey, that when they surveyed these young homeowners, these first-time homebuyers, they said nobody ever told us about these things about owning a house. I just thought I bought a house and it was all great. No, there's all these other expenses that occur, and they always occur. Let me tell you, I promise you without a fact that the dishwasher will go out at absolutely the worst possible time.
When it rains,
financially.
it pours.
Yeah. You will have your car will break down, and right when your car breaks down, you're having to, fetch out the money to fix the car. The dishwasher goes out at the same time. So you need to have a portion of your monthly budget set aside for all these other expenses that go on with homeownership. Again, there's nothing wrong with owning a home. I'm not telling you not to buy a house. I'm not saying that at all. I think home ownership is a great thing. And now, personally, I would do it if I didn't have a family, but because I can see how cheap renting really is. But if you want to own a house, I certainly understand it. But just make sure that you're ready for it. And a lot of this stuff that you hear on television about home affordability and this and that and the other thing, it's complete hogwash. You can afford a home if you want to afford a home, but you have to be reasonable about it, have your expectations in line, and be willing to do the work to own it. And if you can do those three things, you too can join the club of the proud homeowners of America.
And we're all in that love-hate relationship with our houses.
Exactly.
Right? Yeah, and
that's exactly what it is.
Yeah, and Lance, I appreciate you bringing up the point. I don't want the message this morning to come across where we're saying don't buy a house. At least what I'm trying to say is too that there's nothing wrong with renting.
Yeah,
and really,
it's not a bad thing.
Yeah, this message is, it's primarily geared for, younger adults, folks who are kind of getting their start, right? You're out of college now. Maybe you're that first kind of post-career, post-college job, and you're saving money, building up your emergency fund. You're probably renting right now, and maybe there's that. Who knows? Maybe there's pressure where it's like, I got to buy a home, got to buy a home, got to buy a home. Well, what we just want to try to do is just bring up some things where to hopefully educate you or make you realize that, there are some things that maybe I didn't consider when I'm going to make a pretty big purchase. Now, fast forward 20, 30, 40 years from now. Yeah. So if you've bought a home, yeah, it's expensive. Are you going to make, when you buy the house, you don't look at it as, at least for your home that you live in, that you're just going to make money. Typically, yes, you can build up a lot of equity in your home, which can come in very useful when you're older, like me, or even a little older than I am. Like, you can use that equity to be opportunistic if it's used in the right way. That could be a whole other show right there.
Oh yeah.
But I think the message today that I just really want to convey is we're not saying don't buy a house as investment professionals.
Yeah, just make sure you're ready for it.
Yeah, just what are some things that you need to think about? Because just like when you're talking about principal and interest for your mortgage payment, you look at homeowners insurance, just your cost of a premium. For 2025, the kind of the national average for a homeowner's insurance premium for a house that's $300,000, it's about $2,500 a year.
Yeah.
right?
Again,
and those premiums do not stay fixed. Like I looked at our homeowners insurance premium last year. The quote that I received to renew our premium last year, it went up 75%.
No, that's
huge.
Yeah. And then on top of that, homeowners association dues and all these other things that go on that you've got to deal with. And again, the air conditioner goes out, or it's got to be just forget about the fact that the air conditioner breaks. You got to have it maintenanced, right? Hot water heaters, you have to have them cleaned. It's just all these things that go on that nobody tells you about when you're going out to buy your first home that you wind up with. And what's important about the conversation is, I see a lot of these TikToks about how to, people are out there is like, just invest in the stock market. Well, if you don't have any money to invest in the stock market, you can't grow wealth if you're spending all your money just trying to make ends meet. And look, and it is not a fun place to be, is if you strap yourself into a house and have all these other expenses that go along with it, and you're struggling to make ends meet every month, and it's not a fun place to be. It's great. It's great. You own a house. But just understand that when you own a house, you are tied to that house and all the things that go along with it. And this is what and again, this is to John's point. Yeah. We're not poo-pooing owning a house. We both own houses. It's obvious. I'm not saying don't own a house. I'm just saying don't go. It's not a rush to buy a house. There's nothing wrong with renting until you're financially in a position where you can save and invest and own a house at the same time. Because you don't want to be in a position to where you're spending all your money to own this house, but now you can't save any money for your retirement because you're just struggling to make ends meet every month. And it's just a tough place to be. But the media makes it sound like, if you don't own a house by the time you're 30, you're like an old maid, you're a spinster, and we're going to have to put you out to pasture. No, that's not the case, right?
Yeah.
I didn't own my first house till I was 35, right? I rented till I was 35. And, that's okay. Just do yourself a favor and view buying a house as an expense, not an investment, because it's an expense. View it as an expense and see how that expense fits into your budget and allows you to still save and invest and grow your wealth for retirement.
Yeah, you do your homework when it comes to buying the house, right? And just like what I mentioned about our homeowners insurance, how our premium went up 75% from 2024 to 2025. Do you think I'm still using that provider for our homeowners insurance policy anymore? Of course not.
Yeah.
You go out there and you shop, you look at policies, you look at your deductibles and everything. That could be a whole other topic there.
I have people that do that for me.
Oh, yeah. Your people. I like
my
that.
people do it. It's called my wife, but
okay,
my people do all that. So I just dictate. Hey, you need to go shop out the home insurance policy.
Sounds like your people have been talking to my people. My wife, Team Shauna.
Exactly.
Uh-huh.
I tell you what, our household would not run without a wife.
Oh,
because
no
I have no tolerance for that kind of stuff. I'm busy doing what I'm doing to make money.
Yeah.
Yeah. So she has a very good understanding that's what she does.
I need Team Shauna.
Yeah, exactly. I need Team Christina. Absolutely. All right, look. I hope this helps, and I know it's confusing a lot of things. But if you have questions, if you're thinking about wanting to buy a house, have questions about it, feel free to send us an email. Go to the website realinvestmentadvice.com. Just click on the Ask a Question link. John and I are happy to help you out. But again, just step back and just review your personal situation and make sure, don't worry about what everybody else says. Don't worry about what the media says. Don't worry about what your neighbors are doing. Just focus on what's best for you, and you'll come out making the best decision for yourself. Have a great day. See you back here tomorrow with Danny Ratliff for more of The Real Investment Show.